Hello, and welcome, guests, to the latest episode of the AdQuick Madvertising Podcast, a podcast that explores the intersection of advertising, technology, culture, investing, everything between those things at the intersection as well. Today, I'm very excited to have a guest that I've been a longtime fan of online, and hopefully someone who I can consider an internet friend. I want to meet him in person one day, but we have him here virtually with us, Turner Novak, who runs the show at Banana Capital. Turner, how are you today?
I am doing pretty good. Thanks for having me.
Yeah, you're one of my favorite people online because you're just so funny with everything you do. Whether you're like one of the few people of our age cohort that does like short form video, and it's actually hilarious. Like, I feel like none of our peers can do that.
It's a skill set. Kind of learned it, forced myself to do it. I wouldn't say I'm super good. I'm not good at like the TikTok editing. It's probably more of like the raw humor or content, and I take the low hanging fruit.
Well, respect to all of the young video creators who are like wizards at editing, because editing is actually pretty hard. Like that's a skill you have to just get reps in that and practice that to get good.
Yeah, I think it changes when you get good at editing. It changes how you listen to any or watch any piece of content. Editing my own podcast has made me. It's changed how I've listened to every podcast now, because I listen to it from the perspective of trying to learn how to make mine better, or seeing new opportunities to do things. Or I'm like, oh, I would have cut that part right there if I was that host. So it definitely changes.
We do them in the sort of classic format where I'll edit the clips for social, but for the people that actually want to listen to a conversation, most of those people are listening to this while they're working. They want something to stimulate their mind in the background and just get some ideas. And they don't want the 2x or 5x or 100x, sped up thing. You could probably edit it to be a little bit tighter. I'll experiment with that. But I find people just like the conversations, at least with our podcast. Certainly there's other people who do like the really tight, like 15-minute podcasts, like the Vox style stuff where they just get information into your brain. We're not trying to do that here.
That's good. So there's low stakes.
Yeah, it's conversational, it's informal, kind of like a live stream. So Turner, I introduce you as you're running the show at Banana Capital. Let's assume some percent of people listening to this know what that is. Do you want to give a brief overview of what Banana Capital is to people who have no idea?
Yeah, so Banana Capital, it's a venture capital firm. So what we do is we find startups that we invest in. I raise money from outside investors, pool all that money together. They could all obviously go invest in startups themselves, but that's what I do full time all the time. And also startups are risky. So you probably heard people say, in any one individual case, a startup might fail. But if you invest in a portfolio of 30 or 40 of them or more, you kind of get benefits diversification. And in theory, that leads to higher returns. There's a lot of nuance to that, but that's essentially what I do. It's typically, we call it pre-seed and seed stage, which basically just means the first or second round that a startup raises. Usually something kind of consumer facing or some kind of bottoms up software. Usually try to find people solving really interesting problems that maybe you haven't seen other people try to solve before. Usually I think a lot of maybe we're going to get into this, but I don't think I have like a super novel approach. Try to keep it pretty simple. But maybe have a couple of unique things that I maybe do that some founders and entrepreneurs that I meet like. So
I think the banana and your branding is one of the standouts. When you hear venture capital as a young person, it sounds like kind of buttoned down, kind of stuffy, and you're kind of a whole different approach where it seems like you don't mind having a little bit of fun on the internet, which is sort of different than a lot of other VCs.
Yeah, just kind of it was sort of the hole in the market that I found when I was getting into it, starting my firm. Usually when you start a business, you need to figure out what your positioning, or maybe more so counter positioning. how do you differentiate? What's the gap in the customer needs or customer mindset, or, other competitors aren't doing something. So in my case, when I started, I don't know, I guess really ramping this up 3 years ago, it was just to your point. There was a lot of, wealthy people. They golf a lot. They have their Teslas. They talk about, usually they've like sold or worked at successful startups in the past. So they, dish out a lot of advice. I didn't have any of that stuff. So there's no point in me going out and trying to compete with that. So essentially what I did was just like, well, I'm naturally pretty laid back. I take myself very seriously, but I'm not that serious about it. Kind of grew up the class clown, maybe like a little bit of a troll, if you want to call it that. And so it just that was the opportunities that I kind of saw in the marketing. And I realized that a lot of the best founders, they didn't need an investor that would come in and tell them what to do. They kind of needed money. They needed someone they could trust, would mostly get out of the way. They'd be responsive, just not mess anything up. And so that's kind of what we do in a nutshell. There's, times where there'll be like a day, I just spend the whole day helping a founder with like a project or like a week-long thing where I'm trying to help them with this one thing that I can uniquely do. But for the most part, my strategy is not, I'm going to come in and build your company for you. It's, you can do it. You just need money. And I want to be one of the first people to help you do that. So
I love it. And, one thing you do well is I mentioned humor. I think you're a funny guy. You actually know how to meme. I think most people in the business community don't know how to meme. They're just not posters, right? It's a different skill set. I had Trung Fan on the podcast previously, and he made this great, compelling case that basically said something like every single person who like sells things online can have like a shortcut to their audience if they are, humorous or creative in that sense. Do you have any thoughts for someone who's translated, I guess, a natural sense of humor to the internet for obviously, leads for people to come and be like, I want to be a banana capital company, for other either founders or marketers listening who haven't really figured out that finesse to be able to do that? Is there any, I guess, tips you could offer someone like that who's struggling?
Yeah, I think Trung is mostly directionally probably correct, but I do think you have to be careful. If you're selling a business product, there's an element of, trust in a relationship, and you want to make sure people can trust you. And if you're selling them, let's say they're buying $100,000 type contract, it's a large amount of money. You got to make sure when you're selling things online, or you're doing any kind of thing in a business sense, that there's still that element of trust. So you can use memes and humor maybe to cut through the noise in some cases, but I think there still has to be like a real value that you're delivering. You need to actually like pack a punch. And to Trung's point, like you said, memes and humor can be useful for marketing, but I just don't think that can be the only thing. Maybe one way to think about it is a funnel. It's a good top of funnel. So there's an interesting stat that I always like to share. This is a couple of years old, but Instagram said internally they found that meme related content is shared about 7 times more than non-meme related content. And as a marketer, how great is it if people share your product? If you're a business, word of mouth is huge. It doesn't cost you anything. So in some cases, memes and humor can be a pretty significant reduction to your marketing cost, on like a per unit or a per customer basis. But I just think you do need to make sure it's intentional the way you're doing it. I don't think you can just say, hey, we're going to start throwing memes out and we're going to, it's going to save our business. I think it probably needs to be a core part of your messaging, or something that augments the core part of your messaging, if that makes sense.
No, it totally makes sense. And I guess along with memes, there's a lot of people who really want to, and this is a cliche in the marketing world. You've probably heard it in your spheres too, where someone asks, their marketing team member, or they ask their friend, they say, hey, my business, I want to get more attention. I want to market more. Can you help me go viral? And everyone's heard that phrase. You spend a lot of time on, TikTok and Twitter. Are there any, and you're also a VC, so you're pattern matching. Are there any patterns you see to actually doing that? And I guess the follow-up question would be, does it even matter? Is that even the right question?
Yes and no to everything that you just said. So I think there's formulas to going viral. And I think there's patterns that you can learn from. I don't think it's necessarily going to save your business, just, going viral, quote unquote. It can help build your brand and build awareness and build like a top funnel. If you go viral for the wrong reasons, or if you go viral without a proper way to convert on that brand awareness, I think that's where you can kind of run into, was it even worth it? Like you got 20 million views and nothing converted to a sale, right? That really doesn't help you at the end of the day. Or it might have been, you might have gone viral for something that doesn't actually relate to or connect to your brand. And again, it's like, did it really help you? It might actually hurt you. Hopefully not. But I think ultimately when it comes to going viral, if we, I hate that word, honestly, but if I had to describe it or talk through what going viral means, I think you just create some form of content that people resonate or connect with. You can maybe think about it as all these platforms now, there's like a supply and demand dynamic in this algorithmic based feed where all these products, they're ad based. That's how they generate revenue. So they need people to spend time on them. And so they want to show content that people watch so that they keep spending time. So sometimes that can be just a simple supply and demand dynamic where let's just say during the World Cup, everyone wants to see content related to the World Cup. If you have content related to the World Cup, people will see it, people will view it. The platforms will serve that to people. So I think part of it is just kind of filling the supply demand gap that people might want, or maybe let's say, a trend like veganism or plant-based eating is really popular, but there's not enough content related to that. So, making things that fill in those gaps in there's not enough supply of the demand of eyeballs that want to see that or, learn about that. That's an interesting way to do that. I think another aspect of virality is like the sharing, word of mouth. And that generally comes down to being shared in the group chats or, in Messenger, in the DMs. That's another, I think, big component, which it doesn't really show up. Very few platforms show the amount of times content is shared. But one thing you might notice on TikTok, I think TikTok is the only platform that will occasionally show how many times a piece of content has been shared. If you're not familiar with TikTok, generally there's full screen. We've got a couple icons, one that shows likes, ones that shows comments, and usually there's a number, and then there's like a share button. And if there's been a lot of shares, they'll show the number of times it's been shared. So sometimes that, you can kind of tell, like, holy cow, this thing was shared 1 million times. And obviously that's probably getting shared to at least one person. Maybe it's in a group of a couple, tens, hundreds of people. So that's, I guess, kind of the way I think through about, quote unquote, going viral is you just kind of hit something that people wanted and you made interesting content too. Obviously you can try to fill this supply demand gap that's in what people want to see. But if it's not interesting, no one's going to watch it. So I think that's another aspect of it is you want to make compelling, interesting content. And sometimes going viral does not mean getting, let's say you're a business. Let's say you sell a very niche product and there's 10,000 potential customers for that product. Getting tens of millions of views might not even matter. Like going viral, quote unquote, in that kind of context is just getting shared in a couple newsletters that report on that industry that you're in. And there's your 10,000 customers. You got in front of every single one. You could almost think that is the equivalent of going viral amongst that small community that you're selling to. Yeah. And then that's where it really comes down to the brand awareness. Everyone sees your product, every single potential customer. And for me, I basically sell venture capital to founders of tech startups. So, there's maybe a couple thousand, tens of thousands of them. And the way that venture capital works, these numbers are not exactly correct, but a lot of people will tell you there's really only a couple startups that matter in any given year that will go on and they'll go public. So if you can get in front of just a couple of those founders and they trust you and and you build a brand with them, you might go viral in some little an elite niche community, but it had a huge impact on your business. So that's kind of how I think through going viral. I don't think it's like a silver bullet. It won't solve all your problems, but if you do it right, it can be pretty effective.
Yeah, I agree with everything you said, and it's super refreshing. One of the reasons I had you talk to our users and our listeners today is because you're one of, I think, the few investors and venture capitalists who really gets marketing. I feel like that's just a blind spot for a lot of groups. A16 is another group that they really do. Like, you can love or hate them, but like Mark Andreessen going on, Rogan and whatever other podcasts, those guys like really, it's more than just getting marketing. You can tell that they're actually like living and breathing it. And like, you can't fake the things they do. So like you're talking about, creating really cool TikToks. I don't think you can fake your way through that. I don't think it's the type of problem that you can just throw money at. And I think like that's one of the problems with, at least when I talk to marketers in the internet, it seems like something like they're used to a world where there's a surprising number of people who are used to a world where, it's a 3 TV channel world. They can put their money, they can put their hands on the whatever levers with money and, dollars in, dollars back. And that's sort of been broken. I think that world is hanging by whatever thread, it's on, right?
Yeah. And a lot of times, going viral or if capital efficient marketing is just related to understanding all these different channels that you can play on. So to give an example, I don't necessarily know if I agree with it, but it might be an interesting time where Twitter. So you and me both know Twitter's ads are mixed bag. They could probably be a little bit better, right? I think they maybe are sort of effective in some cases, but for broadly speaking, their ad platform is not as good as a Facebook or a Google and maybe some others. That said, the wealthiest person in the world, or I don't know where he's at, Elon Musk, just bought the whole thing. And he is like, I'm just going to turn this into, I'm going to put everything into it. He spends all day on it, sleeping in the office. He's putting everything into it. Will they improve their ad product? I don't know. History says, just looking at Twitter in isolation, I wouldn't count on it. But under this entirely new management team, maybe. So in some sense, it's like paying attention to, will something switch and change where for a couple months or a year, is that the most efficient channel? Like, is it just in terms of like a spend, whether you're just trying to do brand awareness, maybe suddenly Twitter ads start getting targeting really good and converting really well. I'm not holding my breath, but it could happen. And it's just being aware that could be the case. And other, go ahead.
Oh, I was going to say, I run Twitter ads right now, and I shouldn't say this on a podcast, but I will anyway. The CPMs are so low. It's a value buy. It's like, buying a stock at a huge discount. Like, why would I not run ads more efficiently? There are some advertisers that are like, they're all kind of like lemmings, right? Like in the S&P, they all sort of follow each other. If, someone says something at a big event, they all sort of follow it. And it's that there's not too many people that are contrarian and think for themselves because there's not really upside for them. It's very, I've had other guests that are very senior at large ad holdcos, and they're like, yeah, advertising right now is kind of a little bit of a cult of safetyism. It's like where the media industry is, where they're like making sequels to Oblivion because there's no downside for them to do anything different. So I think we'll get a change there soon. But just from a Twitter ads perspective, I think the problem for marketers, because I've run Twitter ads since the beginning, is Google and Facebook's end teams are insane. Like, there's basically an easy button to say, like, hey, find me some conversions and then find more people like this that converted and, basically put it.
And don't show the ads if it's not going to work. And like, just guarantee me if I spend $1 that I'll make $3 or whatever you want your targets to be. And it just does it for you. It's amazing.
I just don't know why Facebook or Twitter didn't at some point just poach part of the Facebook ads team who were like, a lot of those were ex-Google people who, ended up going to Uber. A lot of these really talented people know enough to go to the next hot thing. But I don't know why Twitter never just ponied up for like a couple shit hot people from Google or Facebook to build the same machine.
Yeah, I mean, I think they've tried. I think, I don't know. I don't want to say the wrong thing, I think it is harder than we think it is. Like, it sounds pretty easy, but I think it's actually a little bit more difficult than we think.
Antonio thinks he can fix all of it. I love Antonio. He's so great.
Yeah, and honestly, like I said, the new team, I mean, they cut staff. They basically what Elon said is, this is a startup again. It is not a big, stodgy public company. This is no longer an adult daycare. This is a startup. We are going to make things happen. We're going to go super quickly. And that's why I'm just like, I don't know when it's going to happen, but it could. And, it's maybe.
I think so too. And one thing for Twitter is their ads quality has always been poor. So like, they just need to build up a good ads quality team. And I think like that's like step one. Like if they had better ads quality, and they have Apple, they have Uber, like I see ads from tier 1 brands, and it's, they need to like set a little bit of a bar and not end up in like the Taboola territory of, being like these weird things. But the thing is Twitter users have that habit form. So I think another problem for them is everyone on Twitter is so ad blind. Like it'll be interesting to see what they do.
I think there's just an interesting dynamic too, where Twitter is primarily text-based. And when you think about these platforms like Facebook, YouTube, Instagram, Google's mostly text-based, but it's like intent, whereas Twitter's not necessarily like intent-based. I think it's just a little bit easier when you get just like full screen video, swipe up to buy this thing that you're watching a video for. That's just a little bit easier than how Twitter's product serves an ad. It's just a little bit more difficult if you're trying to stack them against each other.
So, Turner, I want to circle back to VC because that's your area. I just love hearing you talk about marketing. It makes me so happy to hear investors that know what they're talking about. I know everyone listening to this will be like, you guys need to listen to Turner and forward this to their investor friends. So let's talk a little bit helping marketers just get a grip on where venture is right now. A lot of people listening definitely work on VC portfolio companies, and they work together with a lot of the same people. What should a marketer know about just the state of the venture market and maybe even capital markets, if you want to chime in on that?
Yeah, I mean, it's a big topic. I'll try to do my best to give kind of the 2 to 5 minute overview. I'll assume someone really doesn't know how it works, and I'll kind of dial in from there. So the way that venture capital works, like I explained earlier, you raise money from outside investors, you create a fund, you then pool a bunch of risky investments all together. And most of them, as we all know, most startups, everyone will tell you they're risky. They don't necessarily work. When you pool a bunch of them together, the ones that do work will offset the ones that don't. So in theory, it leads to high returns for the asset class. The way that venture specifically works is you generally don't make any money as an investor from the profits of your investment until you exit them and sell them. Like, you invest when it's getting created and being founded, and then they go public, 12, 15 years later, and that's when you make a lot of money. So it's very difficult to make money in between. However, you also make money from collecting something that's called a management fee on the fund. So if you raise $10 million, you get about 20%. VCs will tell you it's 2 and 20. You charge per year, you charge 2% of the amount that you raised, and you get 20% of the profits. But it's actually 2% for 10 years. So it's 20%. So if you raise $10 million, you get $2 million in fees that you collect over 10 years. Well, like I said, it takes a while to get some of those profits. So the easiest way to make money is to raise more funds. So you'll raise $10 million, then maybe you'll raise $100 million, you raise $1 billion. If you raise $1 billion, you make $200 million over the course of 10 years. Now let's go back. We'll compare that $1 billion fund with the $10 million fund. How well does that $10 million fund have to perform to get $200 million in profits and fees? Something like 20, probably like 21, 20, somewhere between 20, 25x returns. That's unheard of. It doesn't happen. So the easiest way to make money as a VC is to raise more funds. And so if people have been following closely, they'll notice all these charts that show how much money all these VCs have raised. And then, of course, it has to go somewhere. You have to deploy it because that's how you raise the next fund, is you invest all the money. So it goes into startups who have a bunch of money to invest. It essentially what it does is it, makes capitals a little bit less scarce. So people are spending more. So if you're on a marketing team, you have more money to spend. Your customers have more money to pay for things. And of course, what we've seen over the last couple of years, the way that most assets are valued is it's an inverse relationship with interest rates. So interest rates historically have trended down for the last 30, 40 years. We kind of hit a bottoming point about a year and a half ago, and they've kind of trended up. Maybe they're stopping, but a lot of asset prices are based on where investors think interest rates are going. And so what's essentially happened is the valuations of some of these startups everyone's invested in gone down. The people that give money to VCs, their portfolios have lost a bunch of money. Usually the people investing in venture capital funds it's like a pension plan, like a teacher's pension plan. You might know someone who, they have pension from the government. They're an employee of the state. They're a police officer, fireman, or, it's like an endowment or a foundation. These are all, 100-year-old structured professional portfolios they have very pristine planned out asset allocation plans till, you maybe have seen all these studies of like, you need to be diversified in not just venture capital, but you need stocks and bonds and real estate. Well, suddenly when the value of all your stocks go down, the value of your bonds actually went down. 2022 was the first, I think it was the first time in 150 years that both stock and bond prices went down in the same year. So no matter how well diversified you are, your portfolio lost money. Guess what happens when your portfolio goes down? That risky end of the spectrum called venture capital, you're putting less money into that asset class. You're also using the liquidity from selling stocks and bonds to fund your investments in new venture capital funds. So suddenly you say, I am no longer investing in venture capital funds. So you have this very high contrast in an 18-month period. I mean, it really happened in like 2 months in the beginning of 2022, where we went from a decade of just raise more and more money to no one can raise any money. And it happened across the spectrum. The best funds were, they raised half of what they thought they would, or 20% of what they thought they would. So that flows into the startups and the money that marketers have to spend, and also the money that marketers' customers have to spend. So it's been an interesting past, probably like 18 months, maybe 20, 24 months. I mean, it's really been an interesting 36 months when you think about since COVID started, the ups and the downs. But that's kind of a rough state of the markets.
Yeah. I'm just curious. I don't want to go too much into interest rates. Are you one of the guys who's like, interest rates going up is good, burn off all the bad companies, let's get back to whatever reality? Or are you more the Zerp forever, let's step on the gas, let's keep going kind of guy?
I mean, I'm probably somewhere in the middle.
Okay.
I'm not an expert on how interest rates work. I mean, having super low interest rates is when you get things like crypto and Web3. I mean, that's
for a while I liked all the cheap rides from Uber and the Airbnb. So like I think it went into like this really postmodern territory at some point where just like weird things were happening, like rock JPEGs were selling for millions, if that was even real or if that was wash trading. But there were other things that were like weird that I think like normal people were like, wait, what's going on here?
I think you don't want interest rates to be zero, because you can't earn any money on the cash or the short-term investments that you're making. The interest rates are not just like what you borrow money at. It's also an asset for someone. Like when you buy a house, we talk about the interest rate on your mortgage. It's a loan for you. That debt is actually an asset for someone else, that they're earning that money from you. And so what happens when the interest rate goes up? That means, let's say like when interest rates are rising, that means that the new debt that's coming out now earns more money than the ones that were issued historically. So the ones that were issued historically, the value of the loans that people own of yours, the value of that loan as an asset actually goes down for them. So I think, and that happened over the course of the last 18 months. And that's why the price of bonds went down. So I actually don't know if it's really that good to have interest rates whipsawing around. I mean, it's good to have them changing to like match supplies and demand and smooth out things in the economy. But moving too quickly can be disastrous. I mean, that's what caused the banking crisis, is all these banks, they had assets that were suddenly worth 10% less or 20 or 30 or 40% less, and they're suddenly insolvent. And that's obviously not a good thing. And
that's why we get all the Jerome Powell memes.
Exactly. Yeah. And so I think when you, when interest rates are too low, people need ways to make money, right? Like, let's say you were to say, I'll borrow money from you and I'll give you 10% interest. And I'll be like, hell yeah, sounds great. Make 10%. Adam's going to pay me back. He's got a great job, not a big loan. Like he'll pay me back. But suddenly if you're like, oh, I'll give you 1% interest, I'm like, I can't do anything with that. Like I need to find new ways to make money. Like find me these like pictures of rocks that are NFTs. Like, and the issue then is when that was happening, you have VCs raising money and investing them into that ecosystem that then drives the prices up even more. And then that's when you get this like fear of missing out, where I'm getting no money from everything else and I'm seeing all these other people making money. And I must be the idiot that's not getting this NFT thing, and then you jump in and it just makes it even worse.
Yeah, I worry a lot that the internet has created widespread fear of missing out, not just financially, but also maybe socially and young people and these other things. I think that's one thing that we're sort of still figuring out as a society, how to balance in, like from an individual perspective as well. Because once you stop having that FOMO, you're like, these are just people like image sculpting online. It's not real life. But a lot of people don't quite get that, and that's like sort of the dangerous part.
Yeah, there's a lot of benefits to the internet. There's definitely some downsides.
So in terms of, a lot of young people are super excited about VC. When I was like a 20-something, like VC was the furthest thing from my mind. I mean, I was an ad creative, so I was, I was looking up at like the Mad Men and the David Ogilvy types and wanting to tell stories and all that. But it seems like a lot of people are really into venture for, I think it's people like yourself, people like Fred Wilson, sharing online, shows like Silicon Valley, even movies like The Social Network. Maybe people don't want to be Zuck. Maybe people want to be, the Peter Thiel type character. So like this has happened. Is this a good field for young people? Are there that many VC jobs? Like I guess any advice for a young person listening to this who's thinks venture capital is interesting, what would you say to them?
I think it's super interesting. It's what I have always wanted to do. Always been super intrigued. I really like technology, the internet, business, investing, meeting people, treasure hunting. I mean, it's exactly what you have to do. It's probably not quite as glamorous as you think it is. And then when I put it in the context of, this whole concept of the way that VCs make money is raising more funds, and that's how when you think about their budget, their operating budget is a business, like the venture capital firm, their revenue coming in the door. Like I said, up, zero. There's less money going around to pay new people coming in. I mean, we're definitely seeing that happen. So probably pretty tough to actually get a job right now. Generally, like the job of a VC is to, find founders, convince them to take your money, help them / get out of the way, and understand when to return the money to your investors. It's very simple. It's the easiest way to describe it. There's a ton of nuance to that. But then that's easier said than done.
Yeah, it seems like there's definitely a barrier to something like VC. I think the people who are the other group that's probably really interested in venture are maybe someone who's like sat in like a Facebook PM role or Google PM role or various company role for a long time and has done, I guess, some individual investing, and they've done okay. Maybe their success is just from the greatest bull market of all time and they're not actually good. But do you think for someone like that, it is Do you think it's easier for them to go out and raise money or join a fund, given like the level of prestige it requires to join a fund?
I mean, raising a fund is so hard. Like I would not recommend trying to do it unless you had an unfair advantage to raise money, which is usually having an unfair advantage, like access, the best founders in the world and convince them to take money from you. Which, like I said, it's easier said than done. I mean, it's interesting when you think about the context of all the prices and the valuations were up and to the right. Everyone had a lot of money, tons of funds. So there's just so many of them out there. It was easier to probably raise a fund 2 years ago than it is today. I mean, probably like, I don't want to get exactly concise. It's probably like 6 times easier or 7 times easier a couple of years ago. It can still be done, but it's actually probably easier to get a job to fund. If I had to.
I'm actually just curious about this too. At this point in time, like, do you know approx how many like tech venture firms there are, large and small? Like, how big is that market?
I don't know. I've seen numbers like a couple thousand.
Wow.
Like 2, 3, or 4,000.
And some of those are, of course, very small. And then,
yeah, some are very small. I mean, there's probably a couple hundred big ones. I mean, the issue is like with everything I just described, it's basically a commodity. So it's all a marketing game. Like we kind of talked about, it's just making things up to convince founders to take money from you, and why.
Yeah, this is why you're doing well, and why other young VCs are trying to play the social media game, LinkedIn game, Twitter game, blogging game. So
yeah,
it makes sense.
It's one way that works for sure, and that's the thing. There's multiple ways to do it. I actually don't know which is the best way. Like if I had to tell you which is the single best, way to source, support, and win all these, the ability to invest in all these companies, I actually don't know which is the best. But
it seemed like at the beginning of this cycle, one very obvious trend was like the TechCrunch blogger to venture capitalist pipeline, where VCs are pattern matchers, and they're like, look, TechCrunch reporters have access to every single startup in the Valley. So it seemed like that was like a rational thing for venture capitalists to do, and why a lot of MG Siegler types are now venture capitalists, whether at Google or other places.
Yeah, that's fair. I mean, I basically, like, any founder that I like DM on Twitter, they probably already follow me, or they usually respond, or I have like a connection to them, which is great. But it's still super hard. That's only part of it. I mean, let's say I had that opportunity back in 2021 and I was like, oh, I'm going to invest in all the crypto startups, or I'm going to invest in all the AI startups, or the 15-minute grocery delivery startups, right? Like, that's that initial aspect of like having the access is just one piece of the puzzle. I mean, the other point is you have to make money for your investors, which is harder, in my opinion.
Yeah, I mean, that's one reason I never wanted to be in venture or investing. Like, I don't mind losing my own money. If I lose, who cares, right? Like,
oh, it sucks. Like,
but if I lost someone else's money, I would legitimately feel bad. If it's like that's some kid's college fund I lost, like I wouldn't be able to live with myself. So I don't do that job.
Yeah, I mean, I think that's why it's so important to have a portfolio. My primary thing is I raise funds, like a portfolio of 30, 40 companies. If one of them fails, it's like there's still 29 more, or 39 more. Like, it's part of it. That's how it works. And then you have some that do really well, and you're like, oh, this is awesome. The other thing that a lot of people do is they raise these special purpose vehicles, SPVs, where you'll go and raise a fund and only invest in one company. And the likelihood, especially when you're investing really early, the most likely outcome is that the company will go bankrupt or could fail. And so those are really tricky. I have had that before. I mean, it sucks. And when it's in the fund, you're like, oh, it's just part of what happens. And even with SPVs, it's like the expectations is probably that it's going to happen, but it still really stings, and it's a tough reality.
Yeah, I mean, investing is really hard. I'm surprised there's not like even more like tax write-offs, especially for like new investors, because you're going to lose. Like they make it really hard to actually like sort of and we like the phrase, pull yourself up by your bootstraps. And it seems like investing, like all these people want to day trade and make money that way. And I'm like, that's so hard. Like that's harder than just working a job and getting a paycheck. Like you're probably going to lose.
Investing so hard.
It's ridiculous.
I don't know. Yeah. The whole Robinhood trader thing was fascinating to me. Just absolutely fascinating. As a college kid who grew up in, I went to college from, 2000, like the early 2010s, like graduated high school in 2009. I mean, just got my ass kicked in college, learning how to invest.
But it's good to do that in college than to have a little bit of money and be older and never had run money and then, lose, 10, 100,000, $1 million, right? Like we definitely know people who made a lot of money via, a lucky startup win and then, made some stupid bets after. I think like they've made movies about these types of people, right? So it's hard. I mean, and it's like the risk threshold that I especially worry about people with exits or people, they're lottery winners, right? So that they're like risk tolerance is infinite. Like they don't understand what it means. This is why we have money managers. They don't understand what it means to not take risks. And, they'll keep going all in because it's like they've conditioned themselves to always be back against the wall and it's not fun for them unless it's super risky. So go ahead.
Well, as I said, to be an investor, you need to have some sort of advantage, whether it's you just have the co-founder of Google starting a new company and your best friends and you get to invest in it. That's an advantage, right? Or like if Elon Musk starts a new company, we would both probably invest, right? Why would you not, right?
There's people that wouldn't just because they hate Elon, but I'll take the money. I'm more dispassionate.
He's a good entrepreneur. So I mean that's one advantage you could have. The other advantage is like let's say you're an absolute expert in something like, we'll just say like AI. And so on one side of that spectrum, it's like you spent the last 5 years investing in AI. You have a portfolio of these, you invest in all these early startups and now they're like valued at billions of dollars. Maybe they're real companies now. Or you're also an expert. You're able to look at it and be like, oh, this is a fraud. This is fake. This doesn't work. This one is real. Like I understand this nuance of how these all work. Like this is the one that makes the most sense to invest in. And if you and me, we're like, oh, AI seems cool. I'm going to, this one AI startup is hot. It's got some hype. Let's invest in that. And the experts are like, what are you doing? There's nothing going on there. Like we're going to get caught up in that. So you really need to have some sort of advantage. And it's rare that you really do. And you probably need multiple advantages. You need the ability to find and get in front of founders. You need the ability to convince them to take your money. Like with A16Z, the pitch is like, hey, we're everywhere. Need help marketing? I've seen it firsthand with some of my portfolio companies. Some of the stuff they do is like insane. Like I'm like, wow, that's actually super helpful that they were able to do that for them. And then the other one is just like expertise. It's just like you're really, really good at identifying and understanding like a market. And maybe that translates into knowing what to invest in. And maybe it also translates into how to help founders. Like, let's say you're just really good at marketing and you're like, hey, I'll like redo your SEO. And like, I'm going to get you your first $1 million in sales just from my SEO magic or something. Like that's kind of an example I just made up, but you need to have something that really sets you apart and like actually moves the needle for you personally as an investor, your firm, or for the founders that you're working with.
Totally. And I think you just went through the whole laundry list of basically what you're getting at is finding edge as an investor. And I think a lot of the Robinhood meme stock phenomenon was there's this notion that, Wall Street, and I don't think this is true entirely, but people think like all of Wall Street and stocks are rigged against the average investor. And so I think when there's that sentiment, there's a lot of us versus them tribalism in society. And there's also spiraling inequality in society. So those things where you have this us versus them dynamic of, Reddit Wall Street bets versus the suits, you create this sort of, the meme stock phenomenon is almost the intersection of, oh, we have this tribe, we're going to take down this other group. And it feels like a lot of other people are doing it. So it almost, skips the whole diligence aspect. And now it becomes this movement aspect, which is sort of a powerful phenomenon. I actually think Wall Street underestimated the amount of bedroom traders or whatnot that there even were to be involved in these companies. And we also have people on on the actual management side, like, the GameStop CEO who are like, wait, we can take advantage of this. I think actually AMC is probably a better example. Like their CEO is like leaning into all of the meme stock people.
That guy played it so well.
Yeah, it's crazy.
Because it's the same thing with venture where it's a supply and demand thing, where in the stock market, I mean, we can talk about fundamentals. Fundamentals do ultimately drive things over the long term. But in the short term, if you and me, we have, and this happened a ton, and people are going to jail and getting fined a lot for this. But like we have a Discord group, and we're just like, it's like, stock pumping. If we're just like, hey, everyone, buy the stock, and everyone buys it, and the price goes up because no one's selling, everyone's buying, and there's demand to like keep buying shares at a higher price, and it goes up. That's sort of what happened with some of the walls, with like the GameStop, the AMC stuff. It doesn't matter what the fundamentals are, because it's a flow of funds thing. There's just funds flowing in. There's demand for that. The price goes up. It's like with anything in life. Like with advertising, everyone listening to this is probably they're bidding in ad auctions. That's exactly what stocks are. It's just like a supply and demand. And you might say, I know Facebook is the best ad platform, but maybe their ads are expensive, or you can find pockets within Facebook that like, there's a certain demographic that just has like a great profile or propensity to purchase your product that's just being under-targeted, undervalued or something. Like there's a lot of opportunity to do that. And usually that just comes from doing like the work of like going on and doing your own research. And like with the stock, it's like, I think classic example is Monster energy drink is one of the best performing stocks of all time. And it's like, you probably couldn't just stumble across that, but I'm sure you probably could find that. And if you really understood maybe like the way that industry trends, the business works, how like the business model of like the importance of like building distribution and like the core gross margins of like literally selling sugar water to people. And you could probably, maybe you you make your spreadsheet, you click and drag out, and you're like, oh, this actually works really well. And like Wall Street doesn't realize it yet because they're worried about the other companies that they're covering. So the one thing, and that's your edge, is like your edge is finding treasures that no one else has discovered yet.
Yeah, I was working at around $1 billion publicly traded company for about a year, and the one thing I learned, I kind of had a sense about this, but I learned being an insider and sitting on the analyst calls that Wall Street does not have enough time to really cover a lot of these small, like especially biotech, but also tech firms well.
Yep.
You get like a junior analyst on the call. It's just not important enough for them because it's not FANG. So they like, so that's when people are like, everything stocks are rigged. I'm like, not really. You've lost emotional game somewhere. Anyone could have bought Apple and just sat on it. There's things that happen short term to shake you up, but it's whatever happens short term, like you can win if you can have like a longer vision.
Well, on that case, I mean, you think about what's the incentives of those analysts. How do they make money? It's it's not quite, but essentially the way that their business that they work for makes money is these companies that they're covering need to raise equity or raise debt. And so they care about the companies that are really big and doing well, that can afford to pay them 10s, 20, $100 million in fees to acquire another company and make a transaction. So there's like a company that's like not doing that well, they don't care about, they're just like, I'm never going to make money from this thing, I'm not focused on it. I mean, that's the opportunity that you have working in between the incentives of everyone else.
Yeah, it's interesting. I now just buy index funds and have given up trying to beat Wall Street because my life and my life is 10x easier. I'm like my stress level is down. I'm much happier. So I'm leaving investing to the investors. But I like talking with them. I think like it's this really cool, complex, infinite game, and I think it's like I'm happy to be a spectator and be boring and buy Vanguard. One other question. We'll end with this one. We can riff on this for a little bit. So we just built out an integration with Shopify, which is super cool. I love Shopify a lot. I'm curious because you've got a bunch of experience with D2C. It seemed like for a while there was like a new Dollar Shave Club every week, right? And it seems like that's cooled a little bit, but I'm curious, like, it seems like D2C could be as big as entrepreneurs want. And what I mean by that is, at least for me, when I find a cool D2C product, I am happy to give them recurring money to some small startup founder instead of a big CPG? Because now I know these founders from social, but another thing that I've considered is maybe I'm weird and maybe I'm not like representative of someone who can be made to give a shit about like their paper towels, right? And so I'm curious, just, I don't even need hard numbers. Just since you followed the space, what's your sense on just the D2C industry, where it's going to go, how big it's going to be? If I'm a marketer in the space, like any ideas so I can project out? I'm just curious what your sentiment is.
Yeah, I guess I do actually want to be clear that I'm not an expert on D2C. I have not invested in any kind of direct to consumer brands, but I have invested adjacent in like some software that serves them and different types of e-commerce, like marketplaces and platforms and stuff. But yeah, I think ultimately, I think that the tricky part with certain types of businesses is they just don't necessarily scale that quickly. When you think about like what are some pretty large consumer like CPG businesses, like there are some big ones like Campbell's, Kellogg's, Procter and Gamble, probably blank, like Hershey's is one. And there's a decent amount. A lot of them have kind of consolidated because you need scale ultimately to compete. I mean, that's really kind of what made sense. And especially, I think the thing that's interesting right now, like if I was starting my own CPG brand, a lot of these big conglomerates evolved in the world of TV ads, like we were maybe talking about earlier, where it's just, and the economies or the benefits to scale are pretty big. We're like, I'm the only one that can afford to run Super Bowl ads and afford to run ads in every single regional TV station around the country or the world. And I'm in every single big store. So I can like use those ads to drive people to stores. So I think if I was building a CPG brand now, I mean, I would just lean into what no one else can compete with. Like I would, again, try to find some unique, I would almost find a super niche area that the TAM, like the market is so small that it just looks like I'm wasting my time in it, but it's strategically, you can expand it and you can almost, which with each passing month or year or whatever, you can slowly build up your own distribution to the point of like your per unit cost goes down slowly over time. This is what I see on the e-commerce side. I've invested in a couple e-commerce platforms that build their own logistics networks because you get full control over your cost structure. And that's really the only way that it makes any sense. Like, I don't think you can be profitable if you don't own your own logistics as you're like an e-commerce platform. So on the CPG side, some of that has to do with not just shipping, but also things like marketing. So you'd probably have some kind of like vertically integrated. I think probably the best example, and I hate to be someone that just doesn't come up with something unique, but Mr. Beast is a really interesting example where he understands marketing. I don't think it's even necessarily like he knows how to go viral, quote unquote. He knows how to tell a story and get people hooked and get them to care about what he's selling. If you watch his content, he incorporates the things that he sells into the video to the point of, honestly, Hershey's is screwed. Like,
imagine being a marketer at Hershey's and like a 20-year-old is just gonna run laps around you forever. There's no way you can catch him.
Yeah, I guess you're putting me on. So I'm trying to think of like what I would do if I was Hershey's. I would like buy Mr. Beast. Like I would literally
you have to buy him. You have to just buy him out.
Yeah, I think they'd need to come up with new products. They'd need to incubate their own content. And when you think about, this is a similar thing that happened with Kellogg's and cereal. If you remember, like Tony the Tiger, like these like fun ads of this like tiger that like, would come alive and like play with the kids. And it was integrated into the TV series like that was on TV. And then you have like a portfolio of like 100 different cereals that all had a character, like Honey Nut Cheerios, Fruit Loops, like the Toucan, and it was just like seeded in the content, and no one else could do that. You had insane scale. But now, and maybe that's what you do. You sponsor every YouTuber or something, or you create your own, again, characters. But I mean, they're not going to do it. Too risky.
No, they're not. It's not for them. These are, people who sit in meetings and say yes to ad creative that a firm in New York did and go home and that's it for them. Like Mr. Beast is grinding about Feastables 24 hours a day online. And like
and he also is working with every other big YouTuber. They're all friends. Hershey's they're gonna have to get creative to convince people to, go against Mr. Beast. Really, at the end of the day.
Yeah, it's really amusing to me because you see brands not doing or really late to things like even having a social community, but at the same time, those brands are happy to throw a few $1 million at a creative shop at a metaverse experience. And the reason is it blows my mind. The reason is because marketers at large brands want one and done things. They want campaigns. They want to, have a turnkey thing they do, and then they're done with it. And then they want to go win their award, and they want to go to the next role. And it's a lot of pedigree, and it's very much the whole field has kind of changed underneath their feet, I think. With not just this, with technology companies making a lot of the middlemen unnecessary and all sorts of other things. Turner, this has been awesome. How can people listening to this find you and connect with you online? And maybe a young entrepreneur, how can they raise their hand and say, Turner, I want to be funded by Banana?
Yeah, I guess a couple ways. Google my name, Turner Novak. You'll probably find some options. I probably use Twitter the most. It's just the easiest, lowest hanging fruit. Me and Adam, it's just you're on your computer doing other stuff, just quick fire something off. That's probably the one I check the most. Use email a lot. It's on my website. If you Google Banana Capital, you can find that. I have a newsletter that I write called The Split. It's kind of like a banana split. You can find that if you probably Google Turner Novak, The Split, or you'll probably find it on my Twitter bio. Other thing, I have a podcast called The Peel, which we interview founders of companies, just go really deep on the story, all the lessons that they've learned. And that's, again, you can probably find it, Google my name, Turner Novak, The Peel. So that's probably it. I try to be pretty accessible. I do miss some things. I get a lot of messages and I don't always get a chance to respond to everything, but feel free to reach out.
Well, thank you, Turner, for spending the time with our audience. For those on YouTube, please like, comment, and subscribe. I'm doing the YouTuber thing again today. If you're just listening to this, if you want to watch us give this podcast, you can find us on YouTube on our channel at AdQuick. Thanks again, and everyone have a great day.